and now gold's priced in dollars. Generally speaking, pricing happens in whatever is the most liquid thing, the most saleable money. Right now, that's dollars. Um, and if Bitcoin eventually gets large enough, then a similar thing can happen where right now Bitcoin's primarily priced in dollars. If Bitcoin becomes so big and the dollar starts to eventually have issues, you can think of like dollars priced in Bitcoin. But that's, I mean, we're talking like at least another zero on the market cap in a whole different era.
Hi, everyone. Welcome to Smart Invest. Consider the issues that are most important to you: growing poverty, rising inequality, broken educational systems, and climate change. You may be spending all of your time, effort, and possibly your professional life attempting to fix it. However, what if we're actually making things worse with the very instruments we're using to address these issues, such as printing more money? Although it may seem counterintuitive, consider this. How does merely adding numbers to a digital ledger produce actual value? It might appear to be a solution at first, but the more you look into it, the more obvious it is that by inflating the system, we are warping the actual worth of everything. This is clearly stated by Lyn Alden. She conveys a harsh but essential message in a recent interview. Increasing money printing won't solve almost any of the major issues we're facing, including mounting debt, eroding institutional trust, and growing wealth disparities. It's actually speeding up. Long-term value creation, creativity, and effort all suffer when money loses its purpose. This has to do with incentives, not just inflation. Alden goes further than that. He changes the subject to something else: Bitcoin as the cornerstone of a new type of economy, rather than as a means of making quick money. One where value must be earned via contribution and inventiveness rather than being printed out of thin air. The goal is to create the first decentralized, truly global free market, one that incentivizes output rather than coercion. We'll analyze a few impactful moments from Alden's enlightening interview in today's video. Stay put if you're prepared to investigate genuine change and examine the underlying cause of the issue. For more in-depth analyses like this one, don't forget to like, subscribe, and enable notifications. Let's get started.
That would be one of the smart moves to do. And Stephen Myron in his paper, again, I keep referencing that paper. If you asked me 5 years ago, would the chair of the Council of Economic Advisors talk about Bitcoin in his paper for restructuring global trade, I would say, of course not. Whereas he did. I mean, he used the phrase cryptocurrencies, but you know, Bitcoin X stablecoin is like 70% of cryptocurrencies, and that's the one we're talking about here. Um, and so he talks about that basically, if you do kind of reshift global trade, it ideally involves elevating neutral reserve assets, and he says gold and cryptocurrencies benefit from this. I probably. And so I do think Bitcoin's a beneficiary of this. Should it be in any way directionally successful? And then if the U.S. wants to mitigate its own impact, yeah, one of the ways is to get into Bitcoin and then try to, establish Bitcoin as a neutral reserve asset. It's better to be early. Now, there's challenges. There's like kind of path dependent or network effect issues here, which is like those four mechanisms I mentioned for the dollar, like the four components being the global reserve currency, they kind of tie into each other. The reason a country might want to hold dollars in their reserves is for a couple of reasons. They know that most commodity contracts are priced in dollars. So in an emergency, if they want to be able to buy commodities, they want to have dollar assets on hand. Similarly, because all this like cross-border funding is happening in dollars, if their banks are lending in dollars and they get caught out with a dollar shortage, the sovereign wants dollars to be able to lend to their own banks to keep them solvent, even if, for example, the Fed decides not to do swap lines with them or something. So assets, to some extent, have to kind of match with liabilities. Maybe not one to one. Like they can hold gold for some percentage of their reserve assets because that's the kind of the part they plan to never touch, ideally. The part that they actually vision like maybe having to touch an emergency, they want that to ideally match their liabilities. So one of the headwinds against Bitcoin and gold in general, but Bitcoin being smaller and more volatile, is that because it's not really used as liabilities, that also to some extent limits its use as an asset. And the mitigant for that is that there's a path dependence, which is, for example, we see it popping up in sovereign wealth funds rather than central banks, because nations can say, well, this is an investment. We're treating it like gold, where we don't plan to ever really touch this, and we're not really thinking of it as backing up our liabilities. It's a separate thing that we expect. We kind of analyze this thing. We think it'll get more valuable, therefore we want to have some, whether it's Kingdom of Bhutan, El Salvador, Abu Dhabi. They're saying we don't need it. We want to have it though. Whereas things that they're trying to match their liabilities is more like need it. And that's the harder part to change over time, and that's kind of the network effect that takes years and decades to resolve. Yeah, I think and that's a very long term thing. It's kind of like how like people often say, Bitcoin's priced in dollars, therefore Bitcoin's not worth anything. It's kind of a bad argument. I mean, there was a time where the dollar was priced in gold, meaning that what was the dollar? The dollar was equivalent of a certain amount of gold. And eventually the dollar system became so big that when it got, cut off from gold, the dollar system became bigger than gold. And now gold's priced in dollars. Generally speaking, pricing happens in whatever is the most liquid thing, the most saleable money. Right now, that's dollars. Um, and if Bitcoin eventually gets large enough, then a similar thing can happen where right now Bitcoin's primarily priced in dollars. If Bitcoin becomes so big, and the dollar starts to eventually have issues, you can think of like dollars priced in Bitcoin. But I mean, we're talking like at least another zero on the market cap, in a whole different era.
Much less than you might imagine. What we refer to as value is beginning to resemble a meticulously preserved illusion in a world shrouded in debt and supported by inflated asset bubbles. However, Bitcoin doesn't follow those guidelines. It is decentralized, has a supply cap, and is energy secured. It exists outside the system. No assurances, no coercion. Bitcoin steadily and silently absorbs actual value, while conventional systems continue to inflate indefinitely. Most people miss that shift. If you know what you're holding and avoid the constant temptation to time the market or chase quick trades, even a small allocation could change your life. Because this goes beyond the math of retirement. It all comes down to deciding which system you trust. On the one hand, we have a collapsing global order based on central control, fear, and credit. An open-source monetary network based on freedom, energy, and transparency, on the other hand, represents a new paradigm. The majority of people won't notice the change until it has occurred. They will continue to pay attention to headlines, rules, and transient price fluctuations. Those who understand, however, are not merely stacking sats. They have nodes in operation. They have their own keys in their hands. They are choosing to opt out. Because it is impossible to return to a system based on deceit and distortion once you have lived within one that is based on honesty and integrity. We'll go into compelling interview snippets in this video that explain everything. Remember to hit the bell, like, and subscribe for more posts like this one. Let's begin.
I'm bullish on it because it shows that it's still just poorly understood. If everyone understood it and this was the price, it'd be like, well, is this how far we're getting? But the fact that so many people still don't understand it, I'm like, well, that's why we're only this far. That's why Bitcoin's worth 2.2%. So 0.2% of global assets roughly are Bitcoin's equal to that value. Gold's 2%. And that's partially why is because people are still like, well, my teeth are scarce. Why aren't they worth billions? It's like, well, because they're not part of a dominant network effect fungible protocol. Uh, you know, it's like why isn't my little pet protocol competing with simple mail transfer protocol or USB? Because it's not even close, right? It's just So I think that there was some reality to it. So in the 2020 to 2024 environment, liquidity was the biggest driver for most asset prices. It was such a crazy macro environment. The liquidity was liquidity always plays a role, but it was a bigger than normal role given the roller coaster of macro and printing and contraction that was happening. And so most kind of liquidity sensitive assets were going up and down together. NASDAQ and Bitcoin up, NASDAQ and Bitcoin down, and what separates them is magnitude over that multi-year period. Um, Now there are other regimes that can happen where they decouple more firmly. And for example, something that pressures the margins of stocks without hurting liquidity is an example of something that could hurt stocks, but not really Bitcoin. Um, Now that doesn't mean that if on a Sunday there's some terrible tax or tariff announcement, and Monday's going to be a terrible open, then of course like Bitcoin's going to sell off on that Sunday night, and it's, and that 24-hour period is going to be correlated. But when you kind of zoom out a little bit, outside of these kind of shocks based on news, if you have this kind of a stagnant margin environment, then Bitcoin could positively decouple from stocks. So basically, or if you have a capital outflow environment. So if just capital wants to pull out of the US to some extent and go elsewhere, you could have S&P 500 or NASDAQ kind of chop around, and Bitcoin actually does pretty well. So I would describe it as something that is still pretty pro liquidity, like an environment where there's reasonable amounts of liquidity. There are no dollar shortages or like dollar value spiking, and yet there are other things that are pressuring U.S. assets, whether it's capital repatriation or corporate margins. That's an environment where Bitcoin can decouple, like, maybe not on a 24-hour period, but on a multi-week, multi-month period. It can hold up better than you expect. And I would say that Bitcoin has held up better than you probably expect, given the equity volatility that happened. It didn't like fully decouple, but it held up pretty well. And I would say that were to be on a sustained basis, you can get a more persistent decoupling. So I think that I mean the cycle's had some periods where it only looked like 3 years. Like
Hmm.
the halving point to the peak of the bull market does vary. I do think we're going to get more complicated cycles going forward. It's not going to be as simple as just 4 years. Um, mining is like a smaller ratio of new coins, like a smaller share of like coins hitting the market. Obviously, the increasing the biggest pool of coins available are resold older coins, existing coins.
Yeah.
So mining cycles should increasingly diminish, and then on top of that, the more it gets institutionalized, or the more that you encounter those scenarios, like I mentioned, where you have good liquidity but maybe not good margins, or capital flows outside of the U.S., then yeah, that can give you totally different looking cycles. Most of this kind of Bitcoin 16-year history happened within one particular kind of regime. And if we enter a pretty different regime, you get pretty different dynamics, as well as just Bitcoin hitting a new scale and therefore having totally different types of marginal buyers and sellers. Yeah, I mean, not like conviction wise, I'm not really sure what gold is going to do, but I do think there are increased risks that it maybe pauses here for a period of time. The last time I felt like this was after its really big run in 2020. Um, and then, that point, it actually lasted, the consolidation lasted longer than I would have expected for gold. I thought maybe we'd pause for a year I think it paused for like 2.5 or 3 years. Um, and I do think gold's probably due for a pause here. Doesn't mean it has to happen, but the probability has just gone up so much. Where like I wouldn't be shocked to see 6 months of just chopping around, or maybe longer. Whereas Bitcoin's interesting because it worked off a lot of the valuation pressure. So in March 2024, Bitcoin had the ETF euphoria pump. There are various metrics you can look at. Like I like market cap to on-chain cost basis ratio. One of my go-to, but there's other metrics you can look at. It's kind of just a sanity check for how euphoric the Bitcoin ecosystem is. It got somewhat elevated in March 2024. It spent like 7 months kind of working that off and going back down at pretty low levels, and then we got the election pump, um, and that brought it up to similar levels again, where it's not like euphoric like one of those multi-year tops, but it's a little rich. So we're at like 108K, and we consolidated from November to the present. So 6 months or so of consolidation off the top of my head. Um, and we've kind of again worked off a lot of that excessive valuation. So I think we're kind of geared, unless some sort of liquidity shock happens, to probably grind up to new highs in the next 12 to 18 months. I would think so. Um, some of the technical signals look pretty good. Whereas gold is kind of on the other side where it's sort of overbought and already had a really strong run. So I think we're kind of due for a little bit of a rotation. Um, but rather than try to be like too kind of choosy, I just hold both. Um, and kind of let them run. And it's for me, it's more about setting expectations and probabilities.
With some analysts aiming for $130,000 or more, Bitcoin is once again getting close to its all-time highs. Although many believe that a new bullish breakout is about to occur, the truth is far more complex. This is about a growing rejection of a flawed financial system, not just about charts and momentum. According to Lyn Alden, the debt-driven economy that is currently being supported by constant money printing is collapsing under our feet. Since central bank liquidity has distorted everything, fundamentals are no longer important. Bitcoin, on the other hand, provides something completely different. A decentralized, energy-backed system that is impervious to manipulation and inflation. Bitcoin continues to quietly draw money, talent, and conviction as the fiat world scrambles to correct itself with stricter regulation and digital monitoring. For those who really get it, it's about leaving a broken system and creating a new one based on freedom, truth, and scarcity, rather than about gaining quick money. The goal is the same whether it is at approximately $30,000 or $130,000. Is it time to opt out or try to fix the outdated system? Please share this video, hit like, leave a comment, and remember to subscribe.